You might have heard the saying, the trend is your friend until the end, and that is because trend trading is very popular amongst traders. In particular, because of the favourable risk to reward ratio, it's also very popular amongst newer traders and those with a small account. So in this video, we're going to look at trend trading for beginner traders. I'm going to tell you what trend trading even is, how to determine whether you're in an uptrend or a downtrend, and a good indicator to use to help you. If you make it until the end of the video, I'm also going to share a top trend trading tip, and also I'm going to share with you a beginner-friendly step-by-step trend trading entry. So if you're excited to learn about trend trading, hit the thumbs up button before we get started. And if you want to see more videos like this, make sure you hit subscribe to Thinkmarkets as well. We're going to head over to Thinkmarkets now, and I'm going to talk to you all about trend trading. So we're on Thinkmarkets. This is where I do my technical analysis. First of all, what is trend trading? So trend trading is when the market is in a trend, as the name suggests. It means that the market is predominantly moving in one direction rather than the other. And often this will be shown by more candles of a same color moving in that direction. So if the market's in an uptrend, you're going to be seeing more green candles than red candles. And also the green candles are more likely to be larger than the red candles. You'll notice that in any trend, there'll still be candles in the opposite direction. These are called pullbacks. But the main push and the bigger candles will often be of a certain color. So I'm going to show you an indicator which I like to use to help me determine whether I'm in an uptrend or a downtrend, and therefore whether I want to be looking for buying or selling positions. So on Thinkmarkets, if you click this symbol here, this gets up the indicators. What we're going to be looking for is an EMA, an exponential moving average. Moving averages show us the average closing price of a certain amount of candles, and it's represented by this line. So effectively, the line does follow the candles, as you can see. The lower the number of the EMA, the closer it's going to be to the candles, because it's only using a small amount of candles. And the higher the number, the further away it's going to be, because it's looking at more candles over a larger period of time. You can use a straightforward moving average, which literally just adds up the candles and divides by the number, or the EMA, which we're using, actually gives greatest weighting to the most recent candles. So this can be a little bit more helpful when you're trend trading, as it's following the most recent candles a little bit more closely, which is why I like to use it for this. At the moment, you can see we're using a 9 EMA, so it's really, really close to the candles. We're going to change this to a 50. What's really important for you to remember is that the EMA that you use is going to depend on the market that you're trading and also the time frame. So you can start with 50 when you're practicing, but it's really important that you use the Trader Gym on Thinkmarkets to backtest your strategy on the market you're trading and also the time frame you're trading, because you might need to adjust it slightly. 50 is a nice even round number, but that doesn't necessarily mean it's going to be the exact right number for the market that you're trading. But we're going to use it here for an example, and you can see that it's a little bit further away than the 9 was, but ultimately it does still follow the candles. Now, how we use this to determine whether we're in an uptrend or a downtrend, we say that if the market is predominantly above the EMA, we're in an uptrend, therefore we're looking for buy positions. If the market crosses to below the EMA, we're now in a downtrend and we're looking for sell positions. You'll notice that sometimes the market does come down to the EMA, but on the whole, it stays above it when it's in an uptrend. And also when we're in a downtrend, it sometimes crosses over a bit, but on the whole, it stays below it. So my top tip for trend trading is not to obsess over catching the very top and the very bottom of the trend. I know it's really tempting to do this, but often when traders obsess about catching the very top and the very bottom, they end up losing sight of their risk management, and it can be a very expensive game. So the trick is to be happy with a chunk in the middle. Don't obsess about catching the very top and the very bottom. And I'm going to show you a very straightforward, beginner-friendly step-by-step that you can use to help you with trend trading. Now remember, it's going to be different depending on the time frame you're trading and also the market you're trading. So definitely back test any strategy or any entry for the markets that you're trading on the Trader Gym at Thinkmarkets. The very simple step-by-step is if the market is above the 50 EMA, you can look for a buy position. If it's below it, you can look for a sell position. You then want to look for a pullback to happen. This is when the market makes a move in the opposite direction to the trend. These happen all throughout the trend, and it's just normal part of price action. The reason why you want to wait for the pullback to happen is often when it looks like the best time to enter is actually the worst time. So when you see these big candles pushing up, these big green candles, at the time, that looks like it's going to be the best time to enter. But actually what you'll notice is following the big candle push up, you often get a small pullback. So what we want to do is we want to wait for that pullback to happen before we look for an entry. So we're looking for at least a 2 candle pullback in the opposite direction to the direction we're trading in. And then we want to wait for an engulfing candle in the direction of the trend. So let's use this one down here as an example. I can see that obviously we've got the candles predominantly above the EMA, therefore we're in an uptrend and we're looking for a buy position. We've got a 3 candle pullback here. Remember, it's got to be at least a 2 candle pullback. And you see we've got 3 red candles in a row there. And then an engulfing candle. An engulfing candle is a candle which engulfs the candle before it. So a candle which is bigger than the candle before it, which is going in the opposite direction. So here you can see this green candle is bigger than the candle before it, and therefore it's an engulfing candle. Your entry can be at the top of the engulfing candle. I would usually use the ATR as well to determine the stop loss. I would usually use around 2 times the ATR. So I'm just going to get that up quickly to show you. If you go to ATR, the average true range, this helps to measure the volatility of the market. So if you go to the engulfing candle and you measure the ATR, it says 327. So if you times that by 2, that's 654. And if you just take a long position tool, we go here, 654. There we go. I'm going to do it this way. 654. And then we'll do 3 times that for the stop loss. I'm going to have to use my calculator for that one because I don't know off the top of my head. 654 times 3 is 1,962. So 1,962. And there we go. That's us catching a chunk in the middle of this trend. So now you understand the basics of trend trading, but it's really important to also understand when the trend is coming to an end, because your trend trading strategy is no longer going to work when you enter into a consolidation or a reversal. So in the next video, I'm going to be talking you through reversal trading for beginner traders. So if you don't want to miss that video, make sure you hit subscribe to Think Markets now. And if you also hit the bell button, you'll be notified when that video is released and you won't miss it.